Hello, I'm Jen Kohls of Richardson Capital Management, and I'm joined with Dan Brown, our Director of Investment Management. We're here to provide the economic and investment update for February 2025. Dan, would you like to begin by sharing the market performance over the past month?
Sure, Jen. Let's start with fixed income. So for the second month in a row, we saw interest rates decline, which was very positive for fixed income or bonds. So we saw rates decline because we think there was a little bit investor uncertainty around economic growth and tariffs, which we'll talk about in a minute. So again, solid returns from fixed income for the month of February. And then shifting towards equities, it was a mixed month in equities. So we saw U.S. stocks decline modestly. Again, I think a lot of that was related to the uncertainty regarding tariffs. But international stocks for the second month in a row continue to be a leadership group. However, we don't think that's going to persist into the year, and we would expect U.S. stocks to reassert their leadership status at some point in the near future.
New tariffs on imports are a top concern across the globe, as well as the potential economic impact. Dan, what is the latest news on the tariffs?
So it was a pretty fluid situation really throughout the month. So we started the month of February thinking that there was going to be a pause on the tariffs, and sure enough, there was for the most of the month. And then we learned kind of right at month end that the new administration wants to put those tariffs in place effective early March. So we think there's going to be 25% tariffs on Mexico and Canada, and as far as tariffs on China are concerned, again, kind of interesting fluid situation where we started with 10% tariffs on China. And then again, right at month end, the administration announced another 10%. So bringing the total tariffs on China to 20%. So the graph we're showing here is looking at, imports kind of by country or region. And one thing to point out is the European Union, represented here by the EU. So as of month end, there weren't any tariffs on the EU. But again, the Trump administration signaled that at some point in time, probably within the next month or so, they were likely to put tariffs on the EU. And as it pertains to Mexico and Canada, the administration was really seeking a lot of cooperation around tightening the border, stemming the flow of illegal immigrants, and also the flow of illegal drugs. So there seems to be a little bit of progress on that front. Again, China seems to be a wild card and maybe looking for help on ending the war between Russia and Ukraine. And again, we just don't know about the EU, what's going to transpire in March. And as we think about tariffs broadly, it creates a lot of uncertainty. And again, that's one reason why we felt that US stocks underperformed for the month of February. So investors, we're going to have to get some further clarity on the timing of the tariffs, how long they're going to remain in effect, and what the impact is to economic growth and inflation.
Another ongoing hot topic is inflation. Dan, what is the Federal Reserve's latest stance on inflation and interest rates?
Yeah, so the Federal Reserve has signaled pretty strongly that they want to remain on hold until they see inflation readings coming down in a sustainable manner. And the past couple months, inflation readings have kind of moved sideways. So we haven't seen that downtrend that the Fed is looking for. And again, they've been pretty adamant that they're going to need to see inflation trending lower before they're ready to reduce interest rates further. We think the timing around further interest rate cuts is probably pushed off now until the summer, maybe June, July. But again, we feel pretty confident that interest rates will go lower from the Federal Reserve and that readings will cooperate and allow them to make those cuts.
With all that in mind, what is our outlook for the financial markets and how has that impacted our discretionary managed portfolios?
Yeah, so despite the recent weakness from US stocks, we still think the outlook is positive and constructive. We think that this economic soft landing is playing out. So we expect growth to slow just a little bit in 2025 relative to last year. And we expect inflation readings will move a little bit lower as we move through the year. And that should allow the Federal Reserve to cut interest rates once or maybe twice. So we take that as a positive. And corporate earnings growth remains very solid. We just wrapped up fourth quarter earnings and saw really solid corporate earnings. And as it relates to the outlook and international stocks outperforming recently, we took advantage of that strength and sold one of our international managers from our discretionary managed portfolios, specifically the three most aggressive portfolios. We still think the case for US stocks outperforming international is in place despite the recent trend change. So we put those sale proceeds from the sale of our international stock manager into US large cap stocks and we would expect that they would, reassert themselves as a leadership group in the near term here.
Thank you for sharing your insights, Dan, and thank you for watching. As always, we appreciate your continued trust and support.